Bitcoin continues its massive move to the side, sideways movement. It's not doing a whole lot these days. So we're going to dig in a little bit here and kind of try to determine what we can expect from Bitcoin and the price action as we get into the latter parts of the months here. I have a couple of charts and things pulled up for you. First of all, if you go into the overall market, look at where Bitcoin is. It currently sits at about 33,000 right now. And over the weekend, this is July 12th. Over the weekend, it sat between 32 and some change to 34 and change, a couple $1,000 range where it was bouncing around. The interesting thing again is if you look at gainers and losers on the 24-hour time frame and track some of these coins, some of these tokens and altcoins and their movement, really interesting to look at. You can kind of see how the automated algorithmic trading is working out. If you look on the losers and the gainers for the day, they all kind of seem to move in tandem. A lot of coins moving up and down at once. A lot of the same coins are up one day, down the next. So that'd be a really interesting thing to track over the 24-hour period, but more importantly, over a 7-day period as well. So you can kind of get an idea of what's up and what's down on a weekly. You could also do the same thing for the monthly. And that's really interesting to look at and look at some of these coins that are up over 100% and 300% over the week and over the month, things like that. And then look at your big losers in terms of which ones are down the most over the week and over the month, to kind of give yourself some opportunities while we're waiting on Bitcoin to make a move, because Bitcoin does carry the rest of the market with it, whether it moves up or down. Same thing with the stock markets. The things to keep an eye on there are Fed policy. There are still huge inflation worries. China is still a wild card out there in terms of what they're going to do. North Korea is having issues right now. So you definitely want to keep an eye on what the Fed does in terms of quantitative easing, monetary policy, interest rates, things like that, because the global financial markets do affect Bitcoin. They are all correlated now because a lot of the same money is moving in and out of the same types of investments. Bitcoin and cryptocurrencies are highly speculative investments. So what you're seeing is you're seeing a lot of money rolling in and out of the stock markets, back and forth between the two. A lot of the meme stock money from the Reddit crowd trade has moved into cryptos, and sometimes they're back and forth, up and down, things like that. So you definitely want to keep an eye on the price action there and go into some of these coins and kind of see what's going on. And if you look at over the weekend, what was really interesting was yesterday afternoon on the East Coast around 6 p.m., we had some movement in Bitcoin that was really interesting. We had this, I'm going to pull up the daily here so you can kind of see where we had this little bit of a spike yesterday afternoon, right around that 6 p.m., 5 p.m. Eastern time frame, where it just kind of jumped up and had a little spike. And if you go look at other cryptocurrencies, Ether and everything else kind of had the same thing. The whole market jumped all about the same time at 6. It was about 5 to 6 p.m. Eastern time yesterday. So that's something interesting to go look at, where you can kind of track movements and things, and what's going on with the overall crypto markets. Now, another thing that's really interesting is there's an article out today about another bearish cross. I know everybody, a lot of people were following the death cross that we had not too long ago, earlier in the month, or back in June. Now we have another bearish crossover where the 50-day and the 200-day simple moving averages are crossing. So this is the first time anything's happened like this since May of 2020. And it is where on the previous moves following the previous bear cross of 100 and 200-day SMAs. So that's what we're looking at right now, is where the 200-day, where the 100-day crosses below the 200-day. It's the first time since May 2020. And a similar bear cross was observed on April 2018, October 2014, and April 2014, coinciding with the interim price bottoms. Now we've talked about, and if you look at the chart, how a lot of times these crosses, these moving average crosses, are lagging indicators. In other words, they're already, they're lagging the price action that's already occurred. So we had this big sell-off here back in May when the market dropped. So now we have this 100, 200-day bearish cross. We already had the death cross over here with the 50 and 200 crossed, 50 crossed down over the 200. Now we'd have the 100 crossing over the 200. And this again was a lagging indicator. We already had downside action. Now you can go back in the charts, even though this is a lagging indicator, you can go back in the charts and look at what was the price action after that bearish cross of the 50 and the 200. Now we're going to look at the same thing with the 100 and the 200. What does that indicate and when did that occur? So if we look at it right here on the chart of Bitcoin, and let me make this a little bit bigger here so you can see this a little bit better. The 50 or 100 is crossing down over the 200 here, the 100 being the red, the 200 being the yellow. And that's a lagging indicator of what's already happened. We've already had that big decline. But if we go back into the history of Bitcoin and we look at where other areas, where, some other areas where this has happened, you see this cross right here where the 100 crosses the 200. We already had some downward pressure when that cross happened, but then we had more downside. And then it happens again, and we have even more in the March pandemic before it crosses back the other way, which indicates that upward price action. So let's go back again to that April of 2018 timeframe where you had the cross right there in April of 2018. It was after a downward sell-off, a big down movement in the market, but then we had even more downside after that happened. So even though it was a lagging indicator, lagging an initial sell-off, we had even more downside action after that cross. And then we're going to go back, we're going to look a little further back in Bitcoin's history, and we're going to look at another example because that's a pattern that just kind of repeats over and over. Like I said, even though it's a lagging indicator, what it shows you is there may have been some downside price action before these crosses, but then they always lead to, so this is back in 2014, like the article was talking about, you had the initial sell-off that led to the cross, because again, it's a lagging indicator, price action moves, it changes, which brings these averages down. But once they cross, you get even bigger downside, you get an even bigger sell-off and a longer downturn in the market cycle before things turn back around to the upside when you get the reverse, which is the upside cross, which leads to increased price action. So that's just one thing to kind of keep an eye on, and to always remember that right now we are still in a downtrend. The entire cryptocurrency market is still in a down market. The trend is still down, and the time frames that you need to be looking at to confirm any reversals or confirmations of trends is the daily, weekly, and monthly closes. So let's go ahead and get rid of these right now. And let's kind of take a look at where we're at in terms of the daily, weekly, and monthly timeframes as we're looking at the chart in general. So we will go back to where I can kind of put some of these things on there. If you look at this, we already had the weekly close yesterday, and we've started a new week. Not a significant downward weekly close, kind of on par with the previous week, but maybe just a hair below it, depending on how it really officially comes out. But that 35.2, we started the week out at 34.2. So we'll see how this ends up. That'll be a huge indicator of what we can expect. And then of course on the monthly, we're still, in a downtrend. We'll see what July ends up being. So the interesting thing about this week, we have some things coming up this week. You have the grayscale, or this month, July, the last half of July, you have that grayscale unlocking coming up. We're not sure exactly what that's going to do. There's a lot of commentary that says it could be good for the market. There's commentary that says it could be bad for the market. I don't think anybody really knows for sure. We'll have to wait and see when that happens, what the results end up being. And again, looking at patterns, what's really interesting here too, the price action of Bitcoin, if you look at Ether, this last couple of weeks, basically from May 20th onward to where we're at now, if you look at this daily price action in Ether and Bitcoin, it looks real similar in terms of what's going on. So really interesting there how correlated these markets are, how the price action correlates. Really, really interesting there. And what that tells me, again, is that there's a lot of algorithmic automated trading going on. Stuff is just kind of set on autopilot. They're creating liquidity here. We're in price negotiation in terms of what's a fair market top for Bitcoin. Will it ever get back to 65,000? We don't know. Will it go beyond that, or is 40,000 our top? Is that what everybody is seeing as a top? Because a lot of people, or the perception may be that, crypto and Bitcoin is on sale now because it's 50% down from all-time highs. But at the same token, if you go back a year ago, to July of 2020, let's go back to July of 2020, Bitcoin was $9,000. And the crypto markets were 50% down from where they are now. So what's a real fair market value? What's a real price? And is it really on sale? Because we don't know. There's a lot of liquidity in the market, a lot of leverage in the market. And one of the things that you need to understand about markets is how much leverage is in the market. When I say leverage, it's not just leverage trading. Leverage is what Michael Saylor's done. He leveraged his company, issued debt secured by his company's cash flow to buy Bitcoin. Then he sold stock to buy Bitcoin. That's leverage. So there's a lot of leverage in the market that led up to this. There's a lot of leverage that's still in the market in a lot of different ways, where a lot of the investment firms have borrowed money. A lot of investors have borrowed money on other assets to buy Bitcoin. So leverage is not just leverage trading. It's other leverage that's entered the market to drive these prices up. So a lot of this liquidity that's being created here is bringing down the basis and de-levering a lot of their positions for ultimately another leg down. So that could potentially be what's happening here in terms of this liquidity zone that's being created. It's just liquidity being generated to de-lever other positions. So until the trend is reversed and confirmed, you have to go with what the trend gives you. And right now the trend is down in a down market, down cycle. And there could be more downside to go here. Now, the other thing that's really interesting to look at, and I misquoted myself on this before, but something else to watch out for that's real fascinating are these moon cycles. And I think I got the date wrong on the new moon, but we've printed a new moon now. And you can see down at the bottom, for whatever reason they have these done this way, the bottom is the full moon. And you can see in the recent trend, and you can go back in the history of Bitcoin and look at all these moon cycle price action as far as the trends go. But on recent, in this current cycle, since the market's been on an upward trend since the pandemic, you could see every full moon led to a boost in price. It led to a pump. It led to an upthrust. And every new moon, the black moons are the new moons, it led to a sell-off. It led to a downtrend. Now, it's been a little bit more tame here lately in this sideways range that we've been in, but you can see this full moon had a little bit of an upthrust. And then we had a little bit of a sell-off, a little bit more of an uptrust towards this new moon. And then we had a little bit of a sell-off there. And we've kind of had a mini version of this over here with this full moon, where we had a little bit of an up and then down, a little bit of an up, then back down. And now we've got this new moon. And you can see in some areas where this price action follows this new moon. So we could, based on history that we've seen, generally what follows a new moon is significant downside in the price action. And, not real terrible here. The last time we went from 40,000 down to 31, we had some wicks down in that 28 range. So if that holds true here, you could potentially be going from 30 down into the 20,000 range that everybody's been talking about, or 25. If these areas are getting more consolidated, then your sell-offs are going to be more limited to the downside and your pumps are going to be more limited to the upside, which is kind of what we've seen. Significant sell-off, a little bit of a pump, less of a drop, less of a pump, less of a drop, a little bit more. So as this range consolidates and these moons play out, and again, this is not something I would ever base any investment thesis on, but looking at the history of this thing, it's something that you definitely have to respect, and you definitely have to give pause and say, wait a minute, look at how these things have played out in the past. What could this potentially do here? And how should you play that? So if you're day trading, I'd watch this. If you're long-term holding and, the cycles aren't part of your investment thesis, then, it's a non-issue anyways. But in any event, just interesting to look at. It's just one of those fun things to kind of watch when you're looking at price action and how different things, I'm not saying the moons affect price action, but those gravitational forces definitely affect nature, animals, people in a lot of different ways. That's just something interesting to watch out for. So at the end of the day, what I expect and what I'm looking at is more downside from here. You may have a little bit of a bounce up or down, but I don't see us breaking out of a $35,000 range anytime soon. I think we have more downside to go. We are in a down market until you get confirmation of a reversal of trend, which is going to be closing above 40,000. I'm still going to look for more downside. So to me, that's it. The other thing to look at is the what we talk about a lot is the hash ribbon indicator that we talk about in terms of putting in that macro bottom. I've shown you that in the past, where you can go back and you need that blue buy signal to kind of confirm that you've reached a bottom. You need these areas to consolidate in the hash ribbon indicator to start coming together and closing a little tighter to kind of indicate you're getting closer to a bottom. Now that is a lagging indicator. Generally, it starts to print green as the bottom is put in, as this area consolidates, gets a little closer together. So that's something to watch out for here. You can research hash ribbon indicator, and there's some information out there on that and how that works, but we are not coming together at all. We still have a pretty wide gap here. And so until that starts to narrow like we went in and you start to see the green print before the blue buy signal, that's when you can kind of see that a macro bottom is being put in. But until I see that, I'm not convinced that we're looking for a bottom anytime soon on that price action. So that's Bitcoin for today. We'll have an update for you here later in the week, especially if we get any kind of price action. But right now, I don't see any. I know there's some good news here and there, or bullish news for Bitcoin here and there, but we're in a downtrend. We're in a down cycle. None of that good news has affected price action to the upside. So right now, you have to go with what the trend gives you. You have to expect more downside before you ultimately see upside. And right now, I'm not so sure, based on what I'm seeing, that we're going to see anything north of 40,000 anytime soon. This consolidation could go on for quite a while. But if you go with the moons, it looks like we've got immediate downward pressure that we are going to see here real soon. So it'll be interesting to see how that plays out. I'll make a video recap on that. Until then, I will see you on the next video.